Okay, I think we're all good now. All right. Okay, we can go ahead and get started. Can you guys hear me? Is this going good? Okay, cool. Awesome. So thank you all so much for coming to talk about how to actually build a card program. I'm glad that so many of you are interested in this topic. It's very exciting to me, and I hope that you all enjoy learning. So just a little bit of an intro. So my name is Kaitlin Swanson. I'm an implementation manager at Lithic. And today, of course, we're going to talk all about how to actually build a card program. So first, a little bit of background on Lithic. Lithic is a card issuing API that grew out of privacy.com, which is a platform for consumers to create virtual cards for secure payments. So privacy was launched back in 2014. And in that process, the team built the tools needed for a card issuing platform and realized that there was a good space and a good need for that in the B2B market as well. And that's how Lithic was started. So then a little bit about me and my role at Lithic. So as an implementation manager, I get to support companies and their developers as they start to build their card program. So I get to go with them from the sandbox phase through production testing all the way up until launch. So I get kind of this unique perspective of being able to see them as soon as they come in, as they're still deciding on what they're going to do for their funds flow. Maybe they're still choosing their Fintech partners. And then I get to be with them all the way through the program launch when everything is finished. So I get to see all different types of card programs and use cases. And we'll talk about a couple of those today. So a quick overview of what we're going to go through in the session. We're going to dive into 3 use cases that are really popular that we see the most. So one is buy now, pay later. Second one is going to be rewards and payouts. And then the third one is going to be crypto cards. We'll talk about the funds flow for each of these, some technical architecture things, as well as essential partnerships that you may need in your fintech stack. All right, so first of all, the card ecosystem. So what does that consist of in the first place? So we have the acquiring side, and then we have the issuing side. So on the issuing side, you can kind of think of you and your bank. So you as the card holder, and then say you bank with just Chase, and they're going to issue you a debit card because you opened a new account. And then on the other side, you have acquiring. So when you go and use that card at a merchant, and then they are partnered with their acquiring bank on the other side. And then in the middle sits the card networks. So like Visa and MasterCard, for example. And a lot of times those are going to be referred to as the rails. When you hear people talk about the card rails, that's normally what they're referring to, is Visa and MasterCard sitting in the middle. All right, so we're going to mainly zoom in on the issuing side of this today. So I'll talk a little bit about what each portion of the issuing business does. So first of all, the issuing brand. The issuing brand is going to be like Cash App, Mercury, Ramp, Brex, kind of the brand that you've heard of that's not a bank necessarily. So those are going to be the non-bank issuing brands. What they're responsible for is owning that end user card relationship. So for example, if you had an issue with your Cash App account, you would just reach out directly to Cash App. You wouldn't need to go find out who their sponsor bank is. So it'll be the brand that you know. And then the BIN sponsor. So examples that you may have heard of, BIN sponsors are like Sutton Bank, Blue Ridge, Piermont. Those are some pretty common ones in the area. But basically what the BIN sponsor is going to do, the main thing that they need to have is they need to hold a banking license. These brands that are not banks can't issue cards if they don't partner with a sponsor bank, because you have to have a bank to be able to issue cards. So that's the main role that they're going to play there. Effectively, they're going to be leasing out the regulatory and network licenses so that that brand can issue those cards. And then you have the issuer processor. So issuer processors are going to be companies like Lithic, Marqeta, Galileo, Stripe Issuing are some other ones. And then the issuer processor is going to be developing and maintaining the technology that sits between the issuing bank and the card networks. So they're going to be there for creating cards and orchestrating and processing the messages that come along with transactions when the card is swiped. So for example, authorization messages, settlements, returns, things like that, they're going to process those messages. And then you have the program manager. So the program manager can be played by a few different parts of this. So the program manager is going to be responsible for managing risk, and they're going to handle compliance on behalf of the issuing bank. So that program manager can be played by the non-bank issuing brand. So the brand itself can be its own program manager if it wants to. And that's normally if they have like the scale and the know-how to be able to handle that, because there is quite a bit that goes into being the program manager. Or it can also be played by the issuer processor or a different partner as well. So those are the main parts. And then next I want to talk about how do issuers make money, because as great as it is to build a card program, you're probably doing it because you also want to make money. So that's pretty important. And that is going to come through interchange. So interchange is going to be a percentage of every transaction that happens on those cards that you're issuing. And that's what helps to pay all of these pieces that go into the whole issuing business, the whole card ecosystem really. So normally interchange can range from about like 1% to 3% or so. It varies a lot and it depends on a lot of different things. So this can depend on the type of card that you're using. Say you're using a debit card, a credit card, a prepaid card. It can vary based on that. Whether the transaction was in person or not, the type of merchant that it was used at. So there's so many factors that play into interchange. And it's definitely something that you want to keep in mind because you kind of want to be able to optimize your program to get the most interchange that you can. Just to kind of give a big picture too, there's about $9 trillion in card spend every year. And if you're factoring like between 1% to 3% of that, there's a huge amount of interchange that issuers can be making. Part of that goes to the network, part of it goes to the other parties that are involved in the ecosystem. But there is still a lot of money to be made as an issuer. Okay, and then next up I kind of want to talk about the changes that have happened in the issuing business. So before, as you know, normally cards were optimized for cards present transactions. You would go and open up a debit card with your bank, they would send it to you in the mail, you'd take that physical card, and your main goal was going to be to use it at a merchant in person. Today, cards are a lot more optimized for card not present spend. So people are using them a lot more online or using them for contactless payments, say in a digital wallet. So that's mainly what they're more geared toward today. And then the other thing, which is a pretty big deal, limited authorization control. So basically before, with that debit card that you received from your bank, they were just checking against your bank balance, making sure you had enough money, and if you did, you were good to go. But now you have a lot more granular control over which transactions you decide to approve and which ones you decide to decline. So with that, you can kind of really gear your card program to something that's pretty specific. So say, for example, if you wanted to make a card for your consumers to give to their teenagers or something, so that they can have their allowance go to that card. Say they're getting $100 a week, you can cap them out at $100 a week, make sure that they don't go over that, but also you can make sure that they're not spending at places that they're not supposed to be spending at. So say their parents, of course, probably don't want them spending at places where they are going to be primarily selling alcohol, for example. You can stop those merchants from being approved. So that's another way that you can kind of use those controls to your advantage. And a little bit about the way that that works too. When a customer goes to swipe their card and do a transaction, and if you're involved in the authorization stream, you're going to receive a webhook asking, is this transaction okay with you? You're going to check, you're going to say, okay, they have enough money, but this is at a merchant category that I don't want to approve. And so you decline the transaction, that person's card gets declined. So you can be involved in the authorization stream, and that's something that was not possible before, so that's pretty cool. All right. And then we'll go a little bit more into what do you actually need to know to build a card program. So there's quite a few different categories when it comes to this. So you've got your card program type, like for example, who's going to be using those cards, what's the purpose, what features are you going to have that are going to kind of set your card apart from others. The card type, what variety of cards are you offering? We'll go into that more in depth too. The funding type, how are you going to get money onto those cards so that customers can spend it? And the Fintech partners, so who are you going to have help you? A lot of card programs are going to require that you have Fintech partners, and that's a really important part of the process. And then one of the other most important things is legal and compliance, which we'll go into a little bit more too. All right, so card program types to start with. So a few things that you want to consider. So who is your end user going to be? Are you going to be primarily marketing to companies, or are you going to be marketing to individuals? So that's going to change quite a few different things along the line of building the card program, and you'll see that as we go through each of the steps here. And then what features are you going to offer to your customers? So for example, maybe you're offering them merchant locking to make sure that when they go and use that card, it locks to the first merchant that they use it on. So they're always going to use it on Netflix, for example, that card locks to Netflix, and in case their details get stolen, somebody else can't use that card somewhere else because it's merchant locked to Netflix. Maybe it's for spend management, fraud monitoring, or you're doing a rewards program, cash back, something like that. There are even programs that can help your customers build credit that goes along kind of with the spend management. So once you determine what's going to set your use case aside from others and what features you're going to offer, you're going to look into bin type. So the cool thing about looking into the bin type is that you can really figure it out by mainly asking two questions. So you're going to ask, who is your customer going to be? So is it going to be a company? Is it going to be an individual? And you'll be able to choose from a commercial or a consumer bin type. And that's going to show you also, just to go back a little bit as well, explaining a little bit more about what the bin is. So the first digit of the bin is the banking identification number. The first digit is going to actually be the major industry identifier. That's going to show you what type of industry that card and what type of industry that card is in. So 4, 5, and 6 are going to be for banking and financial services. So you'll see those a lot. And then the remaining digits are going to represent the bin sponsor, along with the type of bin, licensed country, and then a few other things that are represented there as well. So back to the two questions. So you've already determined whether you're going to be on the commercial or the consumer side of things. So say we're going to do a consumer card. Next, we're going to look at the question of how is this card going to be funded? So are we going to be pooling funds into a prepaid account and then the customer is going to be spending against that balance? Is it going to be connected to a customer's bank account? If it's connected to a bank account, for example, you will probably want to use a debit bin. If it's going to be prepaid, you also have the option of using a prepaid bin. That prepaid bin is a subset of the debit bin. So it's pretty interesting that you can put it on really either one, just depending on what your goals are with your program. And then the third one, credit bin. So this one is a little bit different just because it does need you to have some type of repayment terms. So say you're doing a buy now, pay later program, and your customers are going to pay you back in installments of 4. So then maybe you'd put them on a credit bin. You might even work with a credit reporting agency to help them build credit. So there's lots of ways to use the credit bin as well. All right, and the next up, card types. So card types is my favorite thing to talk about. So it's something that when usually customers come in, you may think that they already have exactly what they feel like they need or what they have as a vision of their program, that they may have already chosen that they want to do physical cards, or that they only are going to do digital wallet and virtual cards. But that's usually not the case. Usually people will come in and they're not 100% sure where they're going to end up as far as card variety. So a lot of times I'll see customers start with virtual. So virtual cards are just going to be the PAN number, so the primary account number, or the card number that's on the front of your card. It's just going to be that. You can use it online, of course. And so then digital wallet is going to work a little bit differently as well. So with digital wallet cards, you can have your own custom art that's associated with the card. It's a little bit more of a setup process. So it may take a little bit longer to get started than just the virtual cards. So that's why I see a lot of customers launch with just virtual to start with. And then kind of the final step I see for a lot of customers, sometimes they'll go through, they'll become a little bit more established, and they'll realize that their customers do want the physical card to have in hand, or maybe even they're doing a tiered system. So say their platinum members are going to get a physical card, but everybody else is just getting virtual and digital wallet cards. So sometimes they'll be able to go ahead and start that physical card process a little bit later on. There's of course drawbacks to each of these types of cards. So with virtual cards, not being able to spend in person, it's probably not going to be your cardholder's primary card that they're using. For digital wallet, it's accepted a lot of places now, but not everywhere. So your cardholder may not leave the house still without having some type of physical card with them that's not yours. And then physical cards, the time that it takes to get the physical cards is normally the drawback for that. Plus the process to actually get them set up takes quite a while as well, or at least it can, especially if you're doing something that's very custom. So that's one of the drawbacks as far as physical cards go. One thing that people do though to get around those drawbacks, especially with physical cards, A lot of times what they'll do, for example, I applied for a Chase Freedom card not that long ago. Once I received the approval, they sent me an email saying, okay, your card is coming in the mail in the next 3 to 5 days, but if you go ahead and click here, you can add it to your digital wallet and you can start spending and making Chase money now. So it's a good way to kind of get around that and be able to have your users start spending as soon as they're approved with your program. Okay, and then funding types. So the funding types at a high level, all card programs are going to follow somewhat of a similar flow from the end user to the issuing bank, through the network, to the acquiring side, and then eventually to the merchant. So it's going to go all the way through that flow. So where the customer funds originally come from is going to vary by the card program type. And having a clear funds flow is really important, especially when it comes to working with banks and the network. The clearer that you have your card program's funds flow laid out, the more comfortable a lot of banks or a lot of partners are going to be working with you, because they want to know where that money is every step of the way. So for example, a rewards card, we'll go into a little bit more detail about the rewards card later so that you can have a visual of it. But with that, customer funds may come from large single payments from the customer who's normally going to be a company. So say a company is going to put all of these funds and they want to offer a loyalty card. So the funds are going to come from the actual brand, from that company, and then customers are going to be able to spend against those funds. And then on the other hand, for a typical consumer card, these customer accounts are going to be the end user's personal bank accounts. So they're going to be funding them from their own account balance. The funds are coming from the customer rather than a company. All right. Okay. And then let's talk a little bit about fintech partners. So some of these we talked about a little bit earlier, but there's a few more, so I'll fill in those. So there's a lot of different partners that you may need to decide on when you're building a card program. So first of all, network. Do you want to mainly work with Visa? Do you want to work with MasterCard mainly? Or maybe a less well-established network is an option as well. So the decision can come from a lot of different things. So when I was talking about interchange earlier, it varies on a lot of factors, right? So it may be that your use case specifically is going to make better interchange with one network than the other. So that may play a factor as well. Maybe you get accepted into a specific program. One example of that is like the Visa Fast Track program. So then you're more inclined to use Visa. And also better acceptance from merchants that are important to your use case. So if you have a specific group of merchants that you know that your customers are going to be spending with the most, you want to make sure that you're choosing the network that has the highest acceptance rate with those merchants. BIN sponsor, we talked about a little bit. That's going to be the issuing bank. Issuer processor, we talked about as well. And then program manager, we went through too. Next one, ACH and money movement provider. So if you're having your end users spend their own funds, how are you going to get those funds from the end user into your program? So you want to make sure that you have a way to get those funds into your ecosystem, and that may require a money movement partner. I would say the next one is probably the one that people kind of overlook sometimes, and that's for ledger. So say if you do plan on using, on being involved in the authorization stream. Say you have customers that are going to load a certain dollar amount into your program, and then they're able to spend against it. How are you going to keep track of how much that user has left to spend? So sometimes what customers will do is they'll put together their own ledgering within their own in-house, or they'll use a partner for that because they may already have like an out-of-the-box solution that's a little bit easier, especially for smaller teams that don't have the bandwidth to build that out. And then card manufacturer. So if you're doing physical cards, who's going to make those physical cards? That's an important decision too, because different card manufacturers may have different abilities. And then also on the other side of things, you have some providers that are going to have an all-in-one solution where they're going to make all the decisions for you. You don't have to worry about who your sponsor bank is going to be. They're going to make all of these choices for you, while others may have more modular architectures that allow you to pick and choose which partners you want to work with. So the trade-offs with that, modular solutions are going to allow you more flexibility to design your own solution the way that you see fit. You'll also be able to get better economics normally because you've negotiated those deals yourself. And then all-in-one solutions are a lot easier to get set up. They're a lot faster and easier to manage, especially, like I said, if you have a small team, you may not be ready to take on all those different partners. You may just need kind of a one partner to work with that's going to handle everything. All right. And then legal and compliance concerns. So of course, this one is really important. So just a little bit about kind of like legal versus compliance. So legal helps interpret the guidance and navigate gray areas to help figure out what the company needs to do. And it also helps with like contract negotiations, employment issues, and other things like that. And then compliance tends to focus more on implementing and running the day-to-day operations. This can include things like confirming that customers aren't on sanction watch lists, or that they are providing the correct KYC that they need to. Oftentimes they're going to work together though. So there's a lot of overlap, and good compliance professionals often help do some of the legal work, especially at earlier stage companies. Each company is of course really different and is going to need different things, but just in general, these are some of the things that you can expect, especially if you have a product where your end user is going to be a consumer, or your customer is going to be issuing cards to an end user who is a consumer. So you can expect to see things like a cardholder agreement, fee schedule. Maybe you are providing, maybe you're working with a customer who is a company and wants to offer corporate cards to their employees. So maybe they're going to be your customer, but they'll be listing their employees as authorized users. So that would need an authorized user agreement. ACH authorization, as well as e-sign agreement. So there's quite a few different things that go into that. Just so that you know as well, we created a free open repository of standard legal documents. It's called the Lithic Legal Library. So that's something that you may want to take a look at too, just so that you know what to expect. That way you can see all the different templates. It can be hard to put these things together on your own, especially if this is the first card program that you're building. So definitely recommend taking a look at that. And then on the policies and procedure side, there are definitely things that you want to keep in mind. One of those is going to be, of course, KYC. So know your customer. You're going to want to know what rules you need to follow. So there are some cases where you may not need to do KYC. There are some cases where you need to always do KYC for every single customer, and you need to know which one of those categories that you fall into. Of course, AML, anti-money laundering, you want to make sure that you as well as your team is aware of that. And PCI compliance is one that I usually talk to incoming customers about as well. It seems to be one that people kind of forget about when they're coming in. So definitely want to emphasize that one. With PCI compliance, where you're going to run into that is if your company is going to be storing card numbers. So say if you are, if you're wanting to keep those card numbers on your system rather than going around it, and some of the ways that you can go around it is to either use a third party. An example of that would be like VGS, very good security, so that way that they can store those card numbers. Or sometimes what customers will do is use our embedded card UI. That's normally the most option that I see used the most. And that way they can present the card number to their end user without it having to touch their system. So if, as much as possible, if you don't want to have to go through that PCI compliance, you want to find a way for those card numbers to not touch your system. So it's just something to keep in mind. All right, so next we'll go into the more exciting part, which is the card program deep dives. We'll go through a visual of each of these and kind of talk a little bit about what goes into each type of program. All right, so first of all, buy now, pay later. So buy now, pay later has seen a big explosion in popularity over the last few years. You probably notice when you go to make an online purchase now, really at any popular retailer, there's going to be an option on your checkout page or on the item page that says option to pay in 4 easy installments, or like get this for as low as $17 a month. And one of the reasons that buy now, pay later is really popular is because it typically makes accessing credit a possibility for a wider audience that may not be qualified for a typical credit card. So some examples of companies that you'll see pretty often are going to be like Affirm, Klarna, or Afterpay. And these types of programs tend to target consumers, like I said, that may not be approved for a typical credit card. And then let's see, so federal and state credit laws may apply here. That is one to definitely take into account. A few states like California may require for you to have registration and licensing in order to have a program like this. So another thing that comes in that you want to be aware of. Like, so the legal and compliance comes in a lot. All right, so as far as the funds flow goes, so it's going to start with the capital source in a buy now, pay later program. So the capital source can be in-house, or it could be a third-party debt facility. So typically, you're going to see smaller programs may choose to fund that float through operating capital, and then maybe larger companies may need to set up an external debt facility. So you'll see it done a few different ways. And then, so what's going to happen in that flow? Funds are going to be moved from the capital source to the program account, basically as necessary to cover the float for the program's approved users. And then the program is going to collect the funds from the end user's external bank accounts, depending on their loan repayment. Maybe if they're paying installments over the next 12 months, they're going to collect those as they go from the end user. And then funds are going to be pulled daily from the account by the network or by the issuing bank if the program account is held somewhere else. So for all and that's going to be for all the transactions that have happened during that day. And then we'll talk about a little bit of a different one. So this one tends to have a lot more simpler of a funds flow. So the rewards and payouts type of card. These are cards that are funded from a single company held account and dispersed to end users to spend up to the balance that's held on that card. So programs like this are often going to look like loyalty cards. They may look like cards for employees to spend their company funds, and sometimes gift card programs will fall into this as well. Usually for rewards programs, you're going to see that you can use your program manager as kind of a one-stop shop. Like I said, this one tends to be a little simpler than the other ones when it comes to funds flow, so you may not need other fintech partners. It'll be pretty straightforward. This one does run into some legal incompliance though. One thing that you'll want to be aware of if you are doing a program like this, payouts cards are typically prepaid cards, and that tends to be for legal purposes. If payout cards are used for consumers, they'll have to comply with Regulation E. So you'll want to make sure that you're aware of that, or that you're working with someone who is making sure that you're on top of that, because you don't want to run into issues. If the payout cards are used for commercial card programs, they're usually going to be subject to less regulation than the consumer ones. So that might be a little bit of an easier road. And then gift cards have their own set of rules. So gift cards are a little bit of a different ballgame because they have their own rules, especially when it comes to charging fees or imposing any expiration dates. And a lot of those tend to vary by state. Payouts card programs can often be structured so that the company is actually the card holder. So we can use that example from earlier. If a company is issuing cards, giving cards to its employees to spend company funds, a lot of times the company is the real card holder, and then they'll have their employees as authorized users on that card. And that way it results also in them having to do less KYC on the actual employees that are holding the cards, because the company is their main card holder. All right, and then for rewards and payouts funds flow. So with this one, you're going to start with the customer accounts. So the customer, the payment is going to be initiated to the brand from their customer. So it's that those funds are going to go from the customer's account into the brand account. And as the program creates cards, the funds to cover the total amount dispersed onto those cards is going to be moved and held at the issuing bank. So funds are typically going to be pulled daily from that program account by the network for all the transactions that are settled during that day. Same thing as the last program. It just makes it a little bit simpler because normally these funds are coming from one company. All right, and last but not least, crypto cards. Probably saved the most complicated one for last. But as you know, the issue with crypto today is basically just that merchants don't yet accept crypto as a method of payment. And that can be kind of a pain point for a lot of people. So in order to make crypto more accessible, you'll see a lot of brands that offer crypto cards now. Basically, they're going to hold crypto on behalf of the end user and provide a card that they can use. It's going to do a crypto to fiat conversion, which you'll see on the next page. It'll be a little easier to visualize. behind the scenes, and then that's going to allow the user to spend at merchants without having to initiate their own conversion to fiat beforehand. So with this one, legal and compliance is definitely a big deal. First thing you want to be aware of, money transmitter laws apply to any business that are going to be receiving money or crypto and transmitting it for someone else. So almost all states have laws regulating this kind of activity, and they can be very burdensome to deal with. So it's best to avoid unintentionally triggering them because you don't want to have to deal with that. Also, partner banks, dealing with partner banks when you are a crypto card program can be really challenging. So partner banks vary in how willing they are to work with crypto cards or to work with crypto card programs. So it's really good to talk with your card program manager or your bank partner about their crypto friendliness and just to kind of get a gauge of how comfortable they are. And then there's also been a lot of discussion about lobbying and financial crime reporting standards that apply to crypto. So it really helps to work with a partner that's open and understanding to the changes and stays on top of those things. Like I said, crypto, it's kind of a different ball game. So you want to make sure that you're definitely on top of these things. All right. And then for the funds flow for crypto. So this one's going to start with the end user's accounts. So say you're marketing your card to consumers. You have consumers, you have their end user account. They're going to purchase crypto from the brand. The brand is going to, the funds are going to be pulled from the end user's account and go into the program account. Then the brand is going to purchase crypto on behalf of the end user. That crypto is going to be held in that custodial crypto wallet up there. And then when a transaction happens, the program is going to convert that crypto into fiat. It's going to go to that fiat program account, and then it can be moved to the settlement account as those transactions settle. So you'll see that this one has like a couple extra steps to it. The reason for that is because the bank isn't going to touch crypto. They don't want to touch crypto, so you want to avoid, you want to make it really clear that that crypto is going to be converted to fiat before that's actually moved to the settlement account at the bank. All right, and some key takeaways. So really there's no standard fintech use case. There's like no standard way to build a card program. So definitely expect to customize your fintech stack, your process, your partners, your funds flow. Being able to illustrate a really clear funds flow, like I said earlier, is going to really help your partners be more comfortable with working with you. Like I can't emphasize that enough. If you come in and you're not sure exactly like where the money is going to be held at each step, then a lot of times your partners may be a little bit uncomfortable, network may be a little uncomfortable. And last but of course not least, don't forget about legal and regulatory aspects. You're operating in a very highly regulated market, industry, so you want to make sure that you are doing as much as you can to follow those standards. All right, and just before we go, are there any other questions? Any questions that you want to go through first before I wrap things up? Okay, go for it.
One of the things you had set up was to handle authorization rules. You could do like a webhook.
Mm-hmm.
Do you have, or do the card brands impose any type of SLA on how fast you need to respond?
Yeah, so normally there's going to be a time as far as responding, and I actually might reach out to one of my team members as far as how long that is. Maybe Preeti, could you help me out on that one?
Yes, the total time window is something like 7 seconds that the whole response has to go back. Now, there's things that are done on the network side, on the issuer processor side. So you, if you're making that decision, really have about 2 seconds. So that's what we try to tell folks, like whatever logic you're running, do it in 2 seconds and get back to us so that we don't risk timeout.
Thanks, Preeti. Any other questions?
What's the difference between a debit card and a prepaid card?
Yeah, so that's a good question. So one of the main differences is going to be acceptance rate. So there are sometimes areas where debit cards are going to be accepted where prepaid cards are not. Prepaid cards are a subset of debit cards. So you'll see that if you were to put a program on a prepaid bin, the card, if you got a physical one, it's going to say debit. It's going to have the debit identifier on it still. But with prepaid cards, where you see the difference, a lot of times is going to be, especially for customers that are like purchasing ads. A lot of times those ad spaces won't accept prepaid cards, but they will accept debit cards. So really, a lot of it comes down to acceptance rate, and also interchange tends to be a little bit different. But really, prepaid is just a subset of debit.
Also, fraud will be much more when you show prepaid.
That's a good point. And if anybody else didn't hear it, fraud being much more of an issue on prepaid than debit.
Sorry.
No, go for it.
You touched on Reg E being a concern. Can you explain a little bit more what Reg E is?
Yeah, I'm actually going to reach out to Reggie over here from our legal team.
Yeah, Reggie, one of the product lawyers at Ethic. I think it was in prepaid or like debit card contexts, maybe payouts slide maybe that was mentioned.
Yeah.
Key Reg E things are going to be like you have certain obligations for debit and prepaid cards around like how fast you respond to disputes. You have certain requirements around like what needs to go in a cardholder agreement. Generally, like you don't want to disclose fees. Their prepaid cards specifically have like a whole set of like kind of scripted model disclosure language that you want for fees. That like it's like totally surmountable, like easy to deal with. It's just stuff you don't want to. You can easily get picked on for doing it wrong by a regulator.
But isn't that what the issuing bank should be taking on for you?
So, well, it depends what you mean by, like, do you mean the bank itself, like the bank partner? They will generally check for compliance, but you're kind of.
So the servicing team of the bank is not taking on this responsibility of being you as the
Right, it's like your program and your flow, you will need to like include this, you'll need to include it in your cardholder agreements. The bank like won't be, I know there's some interesting models where like, oh, a company wants to control compliance, and so they will control how something is presented. Like you will go to a third party to like grab the info you need in the disclosure, but generally it's typically like the card program's responsibility to implement the last step.
Thanks, Reggie. Yeah.
You alluded to this earlier when you talked about like the number that the consumer would call. I think you said like they would call cash out if they see cash out.
Yeah.
I mean, are there models here where the customer support is not handled by the brand that they see there, and it's handled by one of these other partners, or is customer support usually the burden of the brand?
So I've seen customer support, especially with like smaller companies, be a responsibility of an outside brand that they also partner with specifically for customer support. I'm trying to think of any other exceptions where it would not be on the brand. If anyone else has any ideas that can help me out, but I can't think of any where it would go like straight to the bank. Normally, I mean, it may be an issue that has to go to the bank at some point, but normally the customer is going to reach out to that brand first, because they're going to manage their cardholder relationship. Cool. Thanks, Kara. Any other questions?
If
Yeah.
you work with a program manager, would something like call center operations usually be included or not necessarily? That's maybe like a specific case we can ask.
Yeah, so
Hey.
I can jump in, but
Oh, go ahead.
specifically, like even if we're the card program manager, like typically customer support is still with the card brand. The same thing if you were taking on those responsibilities as the card program manager as well.
Yeah. A lot of times, the other thing to keep in mind too is during like the legal and compliance process, a lot of times we will ask for the customer to fill out like what their operating hours are, to make sure that the bank knows what their operating hours are and that the customer can contact them, and also that contact information too. Basically, it gives the bank peace of mind that the customers are going to have somewhere to go to get help. Any other questions? All right. Well, then I'll go to there's more slide. So I know that it's kind of hard to like take in everything about each of these types of card programs all in like one sitting. So we are creating some guides for the three of these that go a little bit more in depth. If you want to scan the QR code, I think that they were also passed out too on a little card.
They're on your
Oh, perfect.
Stand up for your bump. And the QR codes, both of those QR codes are on this card that you can take with you.
Yep, and so it'll ask you to put in your contact information, and as soon as those guides are ready, they will be sent out to you, so that way you can review a little bit more in depth. And then the other one that's on here is if you already have an idea for a card program, you already are ready at the point where you want to speak with an expert about it and maybe get some advice, see how you should be forming it, then you can use that one to schedule. That one's also on the other side of the card. Awesome. And that is all that I have. Thank you so much.